And joining us now is Wang, who is China Director at Eurasia Group, to bring us insight on Beijing's economic strategy and stakes surrounding US-China trade tensions. Wang, thank you for joining us on the show. How significant is this 90-day tariff rollback for US-China relations? I mean, tell us about the political will on both sides in terms of trying to avoid a decoupling of respective economies.
Well, the fact that this talk happened was already a big surprise to the market. And the fact that we now go back to the 10% additional tariffs, the reciprocal tariffs, is a giant surprise to everyone in the market. Nobody expected that. And for China, it's mostly economic pain if the 145% of tariffs stay in place. The job market is in deterioration for about a year and a half now. And deflation has become this permanent phenomenon. If the tariffs don't roll back, China would face this prolonged deflation that would deter any long-term investment from the business community. But for the U.S., the calculation is mostly towards the domestic consumer market and financial market, because there will be empty shelves pretty soon if trade with China don't resume. Above that, there is also the stock market turmoil and the bond market situation. So it does look like President Trump cares about the bond market. It also cares about the empty shelves. So we're facing this positive direction, and a further negotiation is very much on the table.
All right, Ms. Wang, further negotiation. And right now, what we're seeing, these concessions likely because, as you've pointed out, real economic pain in the real economy as well as in financial markets. Is this pain sufficient to drive us through this first stage of concessions and negotiations?
Well, that pain certainly is high enough for both sides to reconsider their position. So China has been pretty tough on its precondition to enter these talks. Like, the U.S. has to roll back all the tariffs. And China cannot appear weak. So far, it seems that Chinese leaders have kept this baseline. And for Trump, the political capital has been spent so much on these tariffs. It cannot really be sustained this way. Before the midterm election in the U.S. next year, there has to be some substantial improvement for Trump to have a win. And for China, too, it can't really be able to sustain this prolonged deflation and economic slowdown. So I think politically, it makes sense for both sides.
The tariffs are still high. We're talking 30% from the US, 10% from China. Is this temporary face-saving measure, do you think, or is really the start of genuine de-escalation?
This is a positive start, but we have to also understand that the fundamental difference between China and the US has not changed. So China is still this state-led model. It's still having this ginormous program of industrial policy. Chinese leaders still have very different view about the future from the American leaders. So for China to make real concessions, it has to be something that Chinese leaders see beneficial for the long term. So in terms of the high-tech sector, for example, that is the ultimate goal for China. It is going to produce more and capture even higher market share in the global manufacturing industry. And for the U.S., this is not acceptable. It wants to re-industrialize the whole economy. And Chinese leaders have a very long-term view on being a stronger voice in the world stage. And for the U.S., it's a threat. So I don't see any possibility that China would roll back on its ambition globally. And for the U.S., will not really concede.
Okay. So what then would be the key risks to this truce unraveling over the next 90 days, given Trump's unpredictable approach, as well as China's domestic constraints, as you've just mentioned? The semiconductor industry, is that going to be a red line?
Well, I think now the focus of the negotiation will shift to fentanyl, because now the 20% of fentanyl tariff would be the highest portion of the tariff that Chinese exporters will face. But one upside for China is that for the next 3 months, Chinese export industry will perform stellar. And we've already seen for shipping companies in China, they are getting flooded with phone calls to book containers. So in the next 90 days, domestic economy would look good enough to give Chinese leaders enough confidence to do further preparation for the next level of negotiation. And maybe China can commit to more of a purchase agreement similar to the Phase 1 deal with the US. That would include energy, agricultural products. And for the US, there has to be some of cutting slack for the export control to China in its high-tech products, especially for chips. Given that NVIDIA has already been this contentious point, there could be some more of a loosening policy regarding the semiconductor.
Okay. So you mentioned fentanyl. The joint statement mentions progress on fentanyl as well as non-tariff barriers. Are we seeing a broadening, you think, of US-China agenda beyond just trade? We're talking about areas like public health. We're talking about technology. Is that possible?
Well, it is a very comprehensive deal if it happens. So China and the US trade are deeply integrated. So there's no way that both sides can decouple from each other. China in this world, the position is a producer and America is a consumer. It's very difficult to change that role. But the deal would have to involve a financial element because Trump kept talking about to reduce or eliminate the trade balance with China. It's technically impossible. The only way that China can partially achieve that is probably by revaluating its currency. So say if China somehow agreed to a 15% revaluation of RMB, then that's immediately about 15% of a trade deficit drop in the US. So that will be a win for Trump. And there's also some financial constraints for Chinese company to get listed in the US, to get financing. If that restrictions is lifted, even partially, it will be a big win for China too.
So we'll get back to currency revaluation as a possible way forward for US-China. But on high tech, that is going to be very hard to move. So for example, for the US, the bundling together of economic and national security, that makes movement on high tech, lifting export curves, although we have seen Trump roll back Biden curves on the export of chips very recently. But the mood right now, neither side is going to be budging on high-tech curves. This is not going to change.
Right. The US-China relationship really rests on this competition for the long term. And for high-tech, that is something that China has invested heavily in and is still doubling down in that front. For artificial intelligence, automations, smart manufacturing, China is going to lead the world and people know it. And for the US, now it still has this comparative advantage in many of the cutting-edge technology. But both sides knows for the transformative technology in the future, it is going to be determined by how committed the government is. And Chinese government is committed for the long term. For the US, its decision is usually affected by the election cycle. So in fact, we do see sort of upper hand on the China side at this point.
So movement that we can see that would give the kind of short-term gratification, let's put it this way, that Washington is looking for might be currency movement. So I think you have raised this point before, the 1985 Plaza Accord, where the US agreed with 5 other countries to, why don't you depreciate your currency and reduce in that way the trade deficit with the United States? And that did work. Could we see a version of that happening today that would bring that kind of gratification to Washington so that it eases up on all these trade partners?
Well, in the Plaza Accord, it was a revaluation, basically appreciation of the trading partners' currency so that the U.S. trade deficit with those trading partners could shrink. And on top of that, there's this self-imposed export quota, especially for Japan. And for China now, we still don't see any sign that China would concede to this type of agreement, but the world is certainly going towards that direction. And I can see that it's in China's best interest to keep its currency stable, at least for now. But in the long term, probably re-anchoring away from the US dollar and anchor with another basket of currency with US dollar only as a fraction of that basket will be more to China's favor because the trading relationship with other trading partners is getting more important. So revaluation or devaluation of its currency are not really beneficial. Maintain a stable level of anchoring towards a basket would be the best way to go.
Pardon me, that was my mistake there, to let the US dollar weaken and not strengthen. My mistake. final question here. We had Scott Bessent earlier on this bulletin coming out saying, we just want balanced trade. Now, balance is in the eye of the beholder. What China's idea of balanced trade is definitely not the US idea of balanced trade is. Could they agree on a common notion of balance, let go of the more difficult items, and say we have both walked away with balanced trade?
Well, as long as the investment and trade directions are going that way, then I would say that's a sort of like broader definition of a balanced trade, because we've already heard a number of companies, Chinese companies, thinking about making a bigger investment in the US, and these are manufacturers. So if that can happen to a bigger scale, then the trade balance between the two countries will shrink, but it will take some time. In the short term, in fact, the US will depend on China for not just the final goods, but also industrial inputs. And for Chinese companies to invest further in the US, they also need to feel more secure. And that depends on what the future negotiations can bring out. So they have to be secure about their long-term investment. They have to be secure about their financial investment and branding that's related with China.
All right, so a start there to rebuild confidence on both sides of these talks. Geneva, thanks for that. Dan Wang, China Director, Eurasia Group, and thank you, and Roland as well.